If I had known about market structure since I started trading would have been very easy for me. You would have caught all the learning curve for me. I got to understand about market structure a very long after maybe 1 or 2 years of my trading career. That's when I was able to understand market structure properly. If you have been finding a way in which you want to understand how to get the market direction, easily understand the market structure, to understand when the market is pushing to the upside, to know when the market is going to the downside. I was talking to somebody recently and he was telling me he does not know how to identify this market structure and make use of indicator. You can use a simple price action by seeing things on your chart to identify this market structure, to identify if the market is going to an uptrend or is going to downtrend, or when it's switching from the uptrend to the downtrend, or when it's switching from the downtrend to an uptrend. So if you are yet to understand it, stay tuned in this video to the end. You are going to understand perfectly how the market structure works, and you can easily apply it on your chart. And if you have any issues, you can also still drop the comment section. I will attend to you just for free. I will send you, if you drop your number in the description box and message me. You can also message me in my description, in my own description box. I will message you and explain even better for you if you are finding it hard to get the video. But trust me, before the end of this video, you are going to understand perfectly how to identify an uptrend, a sideways market, and a downtrend, and how the market operates on its own. So let's get started. So if this is your first time seeing me, my name is Akinwole Victor, aka VstreakFx. What I do on this channel is to make traders profitable by sharing my own experience and sharing things that will help them both technically and psychology needs on how they can grow and have a consistent profit in the forex market. So that's all I do. If this is your first time, you can kindly smash the subscribe button so you can be the first to always get my video. So let's get into the trading topic for today. You can actually identify market structure on any pair, but gold as my favorite pair. I use this mostly for any of my tutorial videos. So market structure is all about the direction of the market. Either the market is going in an uptrend, which is trending to the upside, or the market was going in a downtrend. This is just all about all the market moving in a sideways. Let's say after pushing to the upside, started consolidating this way. Start consolidating. So these are how the market only moves in 3 phases. And how can you identify them on the chart? There are more to them. In an uptrend market, let's go with an uptrend market first. In an uptrend market, we have series of operation of what? Higher highs and higher lows. Hold on. Yeah. So this is an uptrend, and how do you identify them? We said firstly, I said the creation of higher highs and higher lows. So let me label it. Let's use capital letter. Higher high. Let me have more higher high. Market structure does not just make use of it makes use of support and resistance also, because when an high is being broken, technically a resistance is being broken. So we have what we call break of structure here. We have another break of structure here. We have another break of structure here. And that structure is resistance being broken. And we have what is it being called? Then creation of higher highs. I said that uptrend is what? Creation of higher highs and higher lows. Then you have an higher low. You have your higher low here. You have another higher low. You have another higher low. You have another higher low here. So these are how the markets move in an uptrend market. So it creates what? An high, a low, another high, another higher low. And the concept of it is, before a new high can be formed, before this new high, which you can see this high here, before it can be formed, the previous high must be broken. before a new high must be formed. Note, the previous one must be broken, and if it is broken, it is not going to be broken with wick. It must be broken with what? With body of candle. The body of candle must close above it, must close above the previous high, because sometimes people get into what we call false breakout. So we must have the previous one being broken. So that's how you identify if an higher high is being created. And I'm sure you have the knowledge that this is resistance, and in order for the higher, before you can actually ascertain that yes, this is truly the higher low, it must actually have a break of structure. When this break of structure happen, then we now know that yes, this is our higher low. Most times we don't know where our higher low will be formed. We only know that yes, we want an higher low to be formed. We even have chances that we can have a shift of structure, which is a change of character, and market start returning to the downside. So, but let's take it softly. So, before a higher low can be registered as an higher low, it must actually break an high. Then we know that yes, it has broken. And how do we trade the market structure? It's just very, very easy. Very, very easy. Like I said, you use your eyes to see how the market is pushing on an uptrend, creating a series of higher high and higher low. And after seeing like the markets are creating an higher and higher low, you need to find how you are going to buy, because an uptrend, you are trading with the trend. You don't want to get involved in the small moves. Most traders find it's very hard to stay disciplined. Why can't you just stay? Why will you be taking this small push whereby you have a big push that you can actually take? You have this all for yourself. Why will you be taking the small reversal? Why will you be taking the reversal? Why don't you take for it? Why don't you stay with an high probability setup? So when you trade this uptrend market is when you have possibility of higher low to be created. So after a break of structure, then you're looking for area that you can mark as an area of interest, which contain area of value. That area of value, that's where you are looking forward to buy. That is where you are looking forward to place your trade. That's where you are looking forward to see your candlestick reactions. So at this place is where you take your trade. And how can you identify that zone? Mostly I make use of what? My fib level. You know what fib level is? Fib level is 4 minutes Fibonacci retracement. That means where price will actually retrace to. So, and I use 3 key levels. You know, we have a lot of levels on fib level, but I make use of the 62, which I edited myself, 79, 70, 0.70, 75, 0.62. So these are the levels I use. I edited them. You can actually edit it also on your chart. So this level helped me to identify an area of value in the structure. And apart from that, I'm going to see a level whereby price has been acting as what? What is it called? As resistance, and as acting as resistance, now used as support. Now I'm looking for how it's going to be used as support. So I'm looking for a key level. There must be a key level where price has been ranging for a while also. So that's how you trade an uptrend market. So now let's go through the chart and identify the trend. Let's go. Okay, before then, I think I should just complete the downtrend so we can actually just do it on the chart, and because we haven't change of character. So now when we have the market going in an uptrend, it can't keep trending for life. There are times whereby it will have to change from uptrend to downtrend. And how does it change from uptrend to downtrend? The market must break the previous higher low. The price must break the previous higher low. And you can see this is the previous higher low. The price must break the previous higher low. When this is broken, then we now have the market pushing what? Creating in a downtrend, market creates series of lower lows and lower highs. And still same, in an uptrend is resistance that is being broken, but this we have support being broken, and that support will be used as resistance later. I'm sure you understand how it works. In an uptrend, the resistance is being broken and used as support. I'm sure you understand the concept of support and resistance. So we have break of structure, and I said in a downtrend, the market creates what? Series of what? Lower low and sorry, lower low. We have lower high. Let me duplicate this. Loan, sorry, loan. Let me close it small instead of we typing it. Loan. So we have series of lower low. Oh, sorry, sorry, I'm putting the low. Oh, sorry, this is lower high. Sorry, so sorry, so sorry, so sorry. Lower low, lower high. Sorry, lower low, under lower low. You can see low. If you hear the full meaning, lower low, meaning that the low, another low of the previous low. So we have lower high. Sorry, it's the copying that actually made me place it in the wrong area. Sorry about that. We have creation of one lower high. So in order to ascertain for a downtrend, you have to see the market keep breaking a level of support. And I said when I was talking about the uptrend, I said not a weak rejection. Body was closed. You must see the close of the body of the candle. So and this like I said, market structure is it's comprised of support resistance, it's comprised of break of structure and retest. You get? So we have the price what having lower low, lower high, lower low, lower high. So when you're looking forward to take a trade, you are looking forward to take a trade from the possible creation of what? The lower high. And that will contain our area of value. Either you are using the EMA to ascertain area of value, or you are using the fib level, or you are using and also along with your key levels. Very, very clean. So you are only trying to what? Look for area of value. This market structure will put the odds of success in your favor. Trust me. This market structure, trading with the trend, adding more, adding like 2 to 3 time frames and using 2 time frame in sync will put the success of trading in your favor, and it has nothing less than 60 to 58% win rate. So you can trade it in 10 times, comprised of you know you have to understand break even and likes. You can actually use to build a very good model with 60% win rate. So market structure works very, very, very well. So now let's continue. Now what we're going to do now is you can also add other confluences to trade it. You can add trend line, like I said, support resistance, EMA, fib level. It's very, very good to trade. So let's identify the market structure. I don't want to use this place because I don't want to delete it. You can screenshot it and map it out on your chart and backtest it. So let's just start from somewhere here. I don't want this video to be too long, so let me start from around here. So now let's say the market was creating what? This was what? Higher high. Let me move this. Okay. We have this break of structure here. And now possible creation of higher low here. And at that possible creation of higher low, actually there was a very decent entry, but it's matched loss. It's very, very possible. Very, very possible. So now we had a change of character to the downside. We had a change of character to the downside, and the price pull back to retest that level. It's a very solid, it's a solid candlestick entry to take the trade. You can see retest, and you can see this even an head and shoulder chart pattern. Like I said, you can trade it with a lot of confidence. You put your stops few pips above the candlestick that give you entry, and you can easily catch a decent 1:2 This is 1:2.4. Can take a 1:2. Even though you're aiming for a 1:3, when you see that the price is already having a shift of structure, because there will be a shift of structure here. It first happened here, but the market continued. You can break even when the price is coming back to your entry, in case maybe you are targeting a 1:3 and it's only producing a 1:4. So we have the market pushing to the upside there. So we have under break of structure to the upside. Now the change of character again. When market is creating a very bad trend, then still add another change of character at this place, still coming back to have a pullback here. You can see the EMA. It broke the EMA before, but now came to test the EMA here with a level of support, forming more of like an head and shoulder. So look at this setup. This is almost like this setup, almost same pattern. Look at, we have a break of structure here. Can you see? And the price retested. You can see this CHoCH candle with the stops below. With the stops below. Go for 1:2. You can see, look at that, the break of structure here, then the retest. Look at this, how the market switched from an uptrend there. This is an uptrend. Obviously, you're still in the trade. Then switch to a downtrend. And like I said, in building the strategy with market structure, you must be building it not just with a single time frame. For me, if I'm swing trading, I use the weekly, the daily, and the 4 hours time frame for my directional bias. Then before going down to 30 minutes for my entry. So you can't we're just trying to identify how the market creates that wave. You get? So you must be using at least 2 time frame to be in sync with your entry time frame, must also be in sync of that direction to actually ascertain that yes, this is the overall trend of the market. Because on the 1 minute it can be trending up, and on the 30 minutes it can be trending down. On 30 minutes it can be trending up, while on the 4 hours it may be trending down. So just be a retracement of the 4 hours on the 30 minutes showing up. So you must be trading with what? Nothing less than 2 to 3 time frames for your confirmation. You can see after a change of character, it pull back. And most times, one thing I've observed ever since I've been trading on market structure is that when we're having a change of character, it always forms more like an head and shoulder. If you observe, we've seen head and shoulder where market was having a change of character here. You can see this higher high, higher low, and that higher high when it has a change of character here. I want to show you an example here. You can see here we're having an uptrend, then it changed character. You can see this is an head and shoulder chart pattern. How does an head and shoulder chart pattern look like? For those who does not know, look at it. This is it. Then we have the neckline. This is a very good chart pattern that you can also trade and make good money. So this is also a very good chart pattern. So the market structure is just as easy as that. Just help you identify what the market is doing. You can see now here where we have the uptrend. You can see the series creation of higher high, higher low, higher high, higher low, under higher high, the new higher low, higher high, higher low, and now we have a change of character. This is view of today's market. Zero volume. So the market can actually, the price can pull back. Now you have a sideways market. So can you see the sideways? My market is consolidating. So it can either break to the upside or what? Break to the downside. So you may have something like this break out. This is a sideways market, or you have it break out in this way. So market structure is just as easy as that. You just need to understand what series of what, to understand how the market creates its higher highs, higher lows. Like I said, you can combine it with trend lines. You can combine with trend lines to ascertain your buys. You can see this trend line was not included before, but you can easily place your trend line on it. Look at it on the live market also here. This first touch, you can see second touch, very easy to draw, very easy. And now you can see it at a very key level there with an evening, a morning star candlestick pattern. And if you are taking the trade, you take the trade, put your stops below the candle that give you entry, maybe for a very big 1:2, and that's very decent, very decent. So with 1:2 and with a 50% win rate, it's going to put the odds of success in your favor. So thank you for watching. Do well to practice. If you have any question, use the description box, send me a message or drop it in your comments. I will reply to you. So have a wonderful day.